Good morning, everyone. Thank you for joining us this morning for this presentation regarding Paycheck Protection Program loans and maximizing your loan forgiveness. My name is Paul Mueller. I'm the Managing Director for Mueller Pye and Associates CPA. We have offices in Loveland, Estes Park, and Katy, Texas, although really we have 12 offices since, like many of you, our employees are all working remotely. And I'd like to introduce one of those employees to you that will be working with us, working this morning with me on this presentation. And Brooke Hupp is with our firm in Loveland. She leads our accounting practice, particularly in the area of QuickBooks Online and other hosted accounting software options. So good morning, Brooke.
Good morning, everybody.
Brooke, it seems to me like 5 years ago, I probably could have counted on both hands the number of clients that we had on QuickBooks Online. And where are we today as far as growing that part of our practice?
Well, gosh, I haven't looked at it in probably the last month and a half with all this other stuff going on, but gosh, I think we're over 120, 130 probably.
Right. And,
QuickBooks Online.
And, a lot of that credit goes to you, Brooke, in terms of leading us in that particular part of our practice. And, it's this virus situation that we've had over the last month where we've all had to work remotely. QuickBooks Online has certainly become an extremely important tool for us to work with our clients in a remote cloud-based environment. So you helped us get us there. I think you've probably seen more than anyone the benefit of being able to access our clients' information to help them fill out their PPP loan applications, come up with the figures, some of the other things that you've been helping our clients with reports. So I know it's been a big tool for you and for all of us.
Absolutely.
To help in that area. So that's really become an important tool in this program. So let's get into the program. Just to sort of set the context for today's program, we've spent a lot of time the last 3 weeks helping our clients understand the PPP loan program, how to apply for the loan program, what numbers, what information is needed in the application. And that all came to a screeching halt last Thursday when the program ran out of money. Congress and the White House appear to be close to having a second round of PPP loans, so we may be right back into that again. But today, the focus is on, now that you've gotten your loan money, or you've gotten confirmation you're about to get that loan money and it's about to hit your bank account, what do you do now? Because we are under an 8-week clock once those monies hit your bank account. So let's first set the stage and let's remind everybody, what is the Paycheck Protection Program? This was a program that was rolled out through the CARES Act, and we'll talk about the timeline here in just a little bit. But as far as the essence of the program, eligible businesses were allowed to borrow through this program a loan amount based on 2.5 times their average monthly payroll expenses. There were a lot of rules regarding seasonal employers and other types of certain types of businesses, but basically it was a loan amount based on 2.5 times average monthly payroll expenses. It comes with a very attractive 1% interest rate and a 2-year time to repay the loan. And upfront, there's a payment deferral for 6 months. So very attractive in terms of a short-term crisis-based financing program. Now, the loan is eligible for full or partial forgiveness, and that's what we're going to cover here this morning. And you'll hear this once, and you'll hear it many times through the program. Some of the information we're going to furnish you today is based on what we know as of now. We're also going to talk a little bit about what we don't know, because there has not been a lot of guidance issued by the SBA or Treasury on exactly how the forgiveness is going to work. But many of you are into that 8-week forgiveness period, so we can't diddle around waiting for that guidance. We need to be taking some action today, and we'll be talking about that. But before we jump into the forgiveness piece, one thing I want to come back and visit is if we look at these first 4 bullet points on this slide. At its essence, this is a loan. This is a loan program with repayment terms and interest rate terms. Frankly, very generous repayment terms and very generous interest rates. So the whole issue of forgiveness, which again, we'll talk about that, whether the loan is wholly forgiven, partially forgiven, or not forgiven at all because of what you do with the money, this is a loan program, and it's a very attractive loan program. So we'll address some of the questions we've had from folks, and I'm sure we'll get a lot more Q&A during this program. Brooke, you and I will stick around as long as it takes after this program to cover the Q&A that might roll in. But let's remember, as a worst case scenario, this is a 2-year loan with a 1% interest rate. So we'll talk about the forgiveness, but to the extent forgiveness doesn't apply, this is still a very attractive financing mechanism. So with that, let's talk about the timeline, because this has been something that has been incredibly fast. There have been some bumps along the way in the road. There's been some guidance and maybe some misguidance and mixed signals that have been given during this period of time, but it was all because this was done in a very quick, compressed time frame. You go back to Friday, March 27th, which is only about 3 weeks ago, a little more than 3 weeks ago, is when the CARES Act became law, and we became aware of this thing called the Paycheck Protection Program loans. You see the timeline there that, with the loan application coming out and some of the guidance that we received, April 10th was when self-employed and independent contractors could apply for PPP loans. And it was 4 days after that we got our initial guidance from the SBA in terms of how self-employed and independent contractors, how those loan applications would be managed and handled. So it seemed like we were always running a little bit behind some of the guidance. And then on April 16th, the fund program ran dry. Again, we hope to have a second round of PPP loans, but we'll see how that plays out with Congress. So let's talk about the forgiveness piece. You are now right in the midst of determining how much of your loan is going to be forgiven. And the loan forgiveness is based on 4 primary categories of costs. And those 4 areas of costs are payroll and payroll costs, which includes employer paid benefits, things like health insurance, retirement plan contributions, and state unemployment taxes, rent that you might pay on leases enforced before February 15th of 2020. And those are leases for both real estate and equipment, property, personal property. Interest on mortgages incurred before February 15th of 2020 on both real estate and personal property. So that would be like equipment loans. If the loan is in fact collateralized by the equipment, if it's secured by the equipment, that's a mortgage as well. And then all kinds of utilities, and we've listed those there. The most important item to remember about the forgiveness is this is measured over the 8-week period of time starting from the time you received your initial loan disbursement. So when the bank transferred the money into your account, that's when this 8-week clock begins. And it's based on the expenses you pay during this 8-week period of time. And we've had, Brooke, probably the #1 question I've had over the weekend, and we have had folks that have sent us questions over the weekend, and we'll hope to address those during this particular program, is payroll. Because let's say somebody receives their loan money today. Today is April 20th. Let's say they had a payroll period that ended last Friday that they're going to pay this coming Friday. Folks have had questions about, well, do they include any of that payroll in this period or not? And the answer is what the SBA and what the lenders will be looking for is what you actually paid. So it's really going to be the paycheck date. That'll determine, the paycheck date. Whether those expenses fall into this 8-week period of time is not based on when the payroll was accrued or the payroll period, it's the paycheck date. So if you do have a payroll coming up this week and you just received your loan money, that payroll will count towards the forgiveness. Now, fast forward to 8 weeks from now, you may have a pay period that ends prior to the end of the 8-week period, but doesn't get paid until after the 8-week period. That payroll would not be included in this 8-week period. So it's purely going to be based on what you spend during this 8-week period of time, not what you accrue. And the forgiveness is allowed up to both the loan amount and the accrued interest. Now, in the original CARES Act, the language said the forgiveness could not exceed the principal amount of the loan, but in some of the SBA guidance we received over the last couple of weeks, they've agreed that the forgiveness can include both the loan amount and the accrued interest on that loan. Last week, we received guidance from the SBA regarding how Schedule C filers would be treated under the PPP loan program with respect to forgiveness. And for those Schedule C filers, sole proprietorships that have no employees, the forgiveness will be limited to 8/52 of your Schedule C net profit for 2019. So they will not be looking at payments you make to yourself for these next 8 weeks. They're going to be looking back to that 2019 Schedule C and giving you a forgiveness amount equal to 8/52 of that profit. Now, of course, if you pay some rent, interest, and utilities, that will add on to that forgiveness amount. But they have locked in the forgiveness piece for that payroll component for the Schedule C sole proprietor. Some of the mechanics for the loan forgiveness, we listed those 4 categories: payroll, rent, interest, and utilities. We now refer to those as PRIU, payroll, rent, interest, and utilities. They are not treated equally, and that was not clear when the CARES Act was first passed. The CARES Act indicated that you would take all these 4 costs, add them up, and that would create the forgiveness piece. Treasury came in shortly after the act was passed and said, but the payroll piece, the payroll cost piece, must be at least 75% of the amount spent during this 8-week period of time, which means the rent, interest, and utility portions cannot be more than 25% of the amount spent, or you'll take a haircut on how much can be forgiven. So if the payroll piece, but all is not lost. This is not a tripwire. If payroll is not at least 75% of the amount, that doesn't mean you have zero forgiveness. You're just going to get a reduced forgiveness. And the way they said that was, if the payroll costs of that 8-week spend, if the payroll piece is less than 75% of the amount spent, then they're going to determine your maximum forgiveness by dividing the payroll piece by 75%. And that's why we throw in that the greatest oxymoron in the world, which is called simple algebra. So this is sort of tough stuff. Good news is we have a calculator for this that will show in just a few minutes to help in terms of figuring out how this forgiveness rule works. So that was a little bit of a curveball we received a couple of weeks ago, but we're beginning to deal with that particular item. Now, in determining the loan forgiveness, there's a series of reductions that could occur that would actually reduce how much you actually qualify for forgiveness. And this reduction is applied to what you actually spend during the 8 weeks. So it's not necessarily if you spend up all the money in the 8 weeks, are you automatically entitled to forgiveness, full forgiveness. There may be some of these reductions that kick in to reduce how much is actually forgiven. And the biggest one that people have looked at, and the one that's probably the most pertinent for people, is the potential reduction in headcount. So if when you filled out your PPP loan application originally, you had to list in there what your FTE headcount was historically during that period in 2019 from February 15th to June 30th. That was a 2019 measurement. There was a fallback where you could base it on the first 2 months of this year at your choice, but you had to indicate what your head count was during those historical periods. And then what's going to be looked at is during the 8-week period of time, what was your head count for that 8-week period of time? And if it went down, which for many of you, it probably has gone down, there's going to be a proportionate reduction in your forgiveness amount. The other area that the law contained a reduction feature was if you reduced your employees' pay during this 8-week period of time, they're going to be comparing that level of pay to an historical measure. And if your employees are making less than more than 25% less than what they made historically, there's another reduction feature for that. I'll be honest with you, we don't quite know how that particular feature is going to work. We don't know if it works in tandem with the headcount reduction. We don't know if it applies on an aggregate payroll basis as far as reduction, or if it applies per employee. Again, that's one of the items we have not gotten guidance from SBA or Treasury about how that particular rule is going to work. But that one's a little bit troubling to us and a little bit uncertain. The third bullet point, the really good news here is everyone has what I refer to as the June 30th parachute. And what that means is if you've had a reduction in headcount during this 8-week period of time, if you've had a reduction in wages during this 8-week period of time. And it has significantly impacted how much of that loan is going to be forgiven. Everyone has a June 30th parachute, which says if you restore, if you rehire all those employees, if you restore their full wages by June 30th, you get complete forgiveness of the loan. So this is something where, we have a calculator, and we'll look at that in a second, but you got to bear in mind there is this June 30th, what I refer to as the parachute, that will make all these reductions go away and will restore all the forgiveness. Now, one of the questions we've had, and we don't know the answer to that question, is what's the likelihood of that June 30th date being extended? Because depending on how this virus plays out, depending on how the economy is reopened, whether there's a second wave of infections with the virus, is there a likelihood this June 30th date could get extended? And we'll just have to say we don't know, and we'll all have to stay tuned for that type of a development. The other item in the forgiveness calculation is if you have paid qualified wages to your employees under the sick leave and expanded FMLA provisions that were contained in the First Families Act that was passed in mid-March, and those wages qualified for credit where you're receiving your money back for those wages cannot be included in this 8-week period of time for determining the forgiveness. So with that, let's see if we can share my screen and bring up the calculator. Brooke, do you see the calculator?
I do.
Okay, I want to make sure it's there. Brooke, from your vantage point, is this readable, or do I need to maybe increase the size?
It's good for me. It's good for me. I think if you can take it just a little bit bigger, that might help.
Okay, let's try to increase that. Oh, that's too much.
Oh no, take it back.
That's too much. That's too much. Yeah, let's try this. Okay, let's see how that works here. Okay.
There we go.
So this is the forgiveness calculator. Some of you on the call may have received some of our other calculators earlier. We had a calculator to help compute the loan amount. This calculator is specific for calculating the forgiveness amount. And so we'll give you the email address when we get back to the presentation. If you would like to get this calculator, we'll get that sent out to you as soon as possible. But let's walk through it real quick. And I've put in some pretend numbers here just to illustrate some of the things we just talked about in terms of the calculation. When you do receive this calculator, everything that's inside, that's our dog. Must have had somebody come to the front door. That's part of working from home, isn't it, Brooke?
Yes, it is. Absolutely. Absolutely.
Have you kenneled Sadie this morning, or?
Yeah, she's in the basement.
She's trapped.
Yeah.
So these are the things that happen when
I even put a sign on the door, don't ring the doorbell.
We weren't that smart. We didn't have that happen. So anyway, with this calculator, you see everything inside the red box is user entry. So when you get this calculator, you can put this information inside the red box, and then everything that we'll see as we scroll through gets automatically calculated. So what I've put in here is, someone that's received a $100,000 loan. In their application, they said they had 10 FTEs in that historical measurement period. And then the origination date of the loan, that's the date that you first received money on this PPP loan. In this case, I've got an origination date of last Friday, which is April 17th of 2020. And then this calculates for you what the end of the 8-week period is. In this case would be June 12th. So, if this is your loan situation, the 8-week period is from April 17th to June 12th, and that's when we're going to measure your expenses during that time. The biggest portion of the forgiveness, obviously, is the payroll piece. And so I've just loaded in here, I'm assuming bi-weekly payroll, 4 payrolls that will fall within this 8-week period of time with a gross amount of $18,000. To that, I've assumed the employer's paying a significant amount of the health insurance for their employees, maybe making some retirement plan contributions like a 401k match. I put $12,000 in for that. SUTA taxes, again, that gets included in the forgiveness calculation. The other item to be aware of is if you went and got one of those emergency grants. Remember, we talked about the emergency advance through the SBA disaster loan program, where you could receive up to $10,000 as an emergency grant that didn't have to be repaid. If you did receive that advance, that has to be included in here because that will reduce your forgiveness. So since you don't have to repay the $10,000, the government's not also going to let you get forgiveness for that either. So in some way or the other, they did change the rules, and in essence, you will probably wind up having to repay some of that through this forgiveness mechanism. So what I've indicated here is we've spent $75,000 on all these payroll costs, net of the 10. So actually you spent $85,000. We had to back out the 10. Let's just say you did have to furlough a number of your employees, and during this 8-week period of time, you're now down to 6 employees. I threw in some numbers for rent, threw in some numbers for utilities. I didn't throw anything in for interest, but again, we're just playing with these numbers. So you've spent about $90,000 of this $100,000 loan. So remember, we had $85,000 up here in payroll costs. We just had to back out the 10, so that's 85. Let's say this is 5. So you've spent $90,000 of that loan money. When we go down to the calculation here, primarily because of that reduction in the FTE headcount, this shows that of that $100,000 loan, you're going to be forgiven for about $48,000, and you'll have to repay $52,000 of that loan. But let's remember.
Well, one thing.
Yes, go ahead.
Sorry to interrupt. One thing to point out, when you do your mortgage interest, make sure you're just doing the interest, not your full payment, that you're separating out the principal and interest on that. I just want to make that clear for people.
That's a great point, Brooke, because we do see that where some of our clients post the entire monthly payment to that interest expense account.
Correct.
You're right. The principal portion does not count in this calculation. It's only the interest portion. So for this 8-week period of time, and Brooke's going to talk about some bookkeeping tips on how to do this, you want to make sure you're recording the interest part of that payment. So again, the bottom line here is under these particular facts, and I think this is why this calculator is important for our clients and others on this call. You can be running some projections of what this 8-week period might turn out to be, and then you can start thinking about some action steps to maybe improve your forgiveness. But in this particular case, about half the loan's being forgiven, and about half the loan will have to be repaid. So that's that calculation. The one thing, again, I want to remind everybody is, and I think I have a note up here, remember, if by June 30th you were to hire all 10 employees back and they're back on payroll at their historic wage levels, then the whole forgiveness will go away. So there is that backdoor incentive that the government put into this bill for you to hurry up and hire all those people back by June 30th and try to maximize your forgiveness. Okay, and again, we will send this out. If y'all want this calculator, we will certainly get that out to y'all. So let's see. Looks like I'm gonna have to share the screen again to get back to the show. Here we go. There we go. Okay, so the new calculator, there's the email address. If you'll send a request to that COVID@MuellerPiCPA.com mailbox, if you'll send a request there and say you'd like to get the forgiveness calculator, we will make sure that we get that to you right away. Okay, so we've shared with you what we think we know in terms of how the forgiveness is going to work, but let's spend just a second and talk about what we don't know. And these are the questions you've been asking us. It's the questions we've been asking ourselves on our COVID team calls that we have almost daily, because we're not exactly sure how a lot of these things are going to work. So there is a lot of question about what is an FTE, what is headcount. You might remember back with Obamacare, the FTE definition for purposes of the health insurance mandate was 30 hours a week. We've been led to believe that the FTE definition for this particular loan program will be 40 hours a week. The SBA also has a headcount test that they use with certain industries. So we're not quite sure what this headcount and FTE definition is going to be. SBA and Treasury promise us they're going to issue guidance on all of this, but for those of you that have your loan funds and are under the 8-week clock, we can't sit and wait for that guidance to come out. We need to act now. Again, like I said earlier, we're not quite sure what the impact of that 25% wage reduction, how that factors into the calculation, and we're not exactly sure how that June 30th parachute will work. It seems to be like I said, a parachute to make the forgiveness happen. But we've certainly been surprised the last 3 weeks with some of the guidance we've gotten from SBA. So we'll just have to wait to see how that applies. Will office and home expenses qualify? For many of our self-employed clients, our independent contractor clients, many of our business owner clients have offices in their home. Well, if a portion of those home office expenses are the mortgage interest on the house and a portion of the utilities for the house, will that be counted in the forgiveness calculation for interest and utilities? Again, we're not quite sure. We hope that we'll get some guidance on that. Brooke, did you have something?
Nope, sorry, I was agreeing.
Oh, okay. The other thing is, how will lenders interpret and apply these forgiveness rules? And I think this is really important to understand that we're going to share information with you today of what we think we know and what we don't know. But at the end of the day, it's the lenders that are going to have the final say as to how much of your loan is subject to forgiveness. So while we furnish you some general guidance today, I hope you're in communication with your lender to make sure how they view these rules and how they're going to apply the forgiveness rules when you get to the end of this 8-week period of time. So make sure you're following their guidance and understand what their process will be so that there's no misunderstanding at the end. The other item we don't quite know yet is the income tax treatment of the expenses related to the forgiveness. Now, we do know the amount of the loan to be forgiven is tax-free income. We're just not sure if you're going to be able to double dip and actually deduct those expenses too. So, what we may see is that to the extent the loan is forgiven, some of those expenses may be non-deductible at the same time. But again, we don't know that, and we're going to rely on future guidance from Treasury and SBA. So, Brooke, those are some of the rules. Now, what do our clients do with these rules? How do we keep track of these expenses? And this is where I need your help.
Okay. Well, the first thing is you've gotten your money, and now you need to record it in your QuickBooks. And I don't have a spreadsheet on this, but it's pretty basic. You're going to go in and set up an account on your general ledger. It's going to be an other current liability. I recommend calling it PPP loan because of right now, it's still a loan until we figure out the forgiveness piece later. So when you put that money and you deposit it, set up an account, other current liability, and call it a PPP loan. And that's the best way to track it from the get-go. The next piece is you need to track those expenses separately. What we're recommending, and I will share my screen here. And this is just a little snippet. Can you see?
Yep.
Okay. This is a little snippet of one I've already done. This is actually using QuickBooks Online. But what we're recommending is set up an expense account called PPP expenses. And then under that, you're going to set up the 4 other accounts that we've talked about as sub-accounts under there. And I recommend putting the PPP in the front because sometimes we get on autopilot as we're recording things and just start typing in utilities just out of habit, and you don't want to be using that other utilities account during this time. You want to make sure you're using this account to make things easier when your bank calls, your lender calls with what information they're requiring. So set up a PPP interest, the PPP payroll costs, PPP rent, and PPP utilities. Now, when you're entering all those, I would recommend, sorry.
Yeah, Brooke, let me just jump in and remind folks, these accounts are only for that 8-week period of time. So if you go back to that calculator example I had where somebody got their money on Friday, April 17th, I think the end date of that 8-week period was like June 12th. Mm-hmm. What we're saying is you're going to use these accounts just for that 8-week period of time to keep track of these specific expenses that could potentially qualify for forgiveness.
Correct. The other thing we recommend is either set up a folder on your desktop or run to the supply cabinet, grab your manila or colored folder, label it PPP expenses, whichever works best for you. After you enter those utility bills or you run your payroll report, which I'll talk to you about here in a minute, stick them in here, stick them in the folder on your desktop so that if your bank requests those, you've got them easily accessible and ready to go to them.
Good point.
So that's pretty basic. If you need help setting these up, definitely let us know. We can help with that, but those are the accounts we're recommending. One of the hardest ones though, the rent, interest, utilities, those are gonna be pretty easy. You're gonna just enter those right off the bills. Payroll costs though is gonna be a little bit more challenging. So what I have done, and Paul, do I have to unshare to go to another screen?
I think you can just hit the share button again and it'll bring up the window where you can select what it is you're looking for, or you can go ahead and X out of this screen.
One second. There we go. Okay, so for payroll, as it goes by check date, so what I've just made a quick, simple Excel spreadsheet here, not very fancy. Can you see that, Paul?
Yeah, it comes across. Yeah, it comes across well.
Is it big enough?
I think so. I can see it, even
Okay,
with my
good.
glasses on.
Perfect. So you would use this journal entry no matter what you're using as a payroll provider, whether you outsource to ADP, or if you're using desktop, QuickBooks Desktop or QuickBooks Online. You're going to run a payroll report for that pay period. And again, it's by check date. So you would run your payroll report, and using that report, you would fill in these numbers. So payroll expenses is going to be your gross payroll for everybody minus officer's salary. So you want to back out the officer's salary out of that. And then you also need to look at, because of the limits, I've got the little asterisks here, depending on what your pay period is, if it's weekly, biweekly, semi-monthly, you can only go up, it's only allowed up to $100,000 per employee per year. So that's how we got these numbers down here.
Yeah, so
is
Brooke,
dividing it by those pay periods.
Yeah, so if I can just jump in here real quick, the pay, as Brooke mentioned, the payroll that can be considered during this 8-week period of time is on an annualized $100,000 limit. So when you break that $100,000 annualized limit on a weekly, bi-weekly, semi-monthly, or monthly basis, depending on your payroll frequency, this is the maximum amount you can take into account for any of your employees, including the officer as well.
So you need to make sure, when you're doing this, I would grab the total gross, back out your officer's total, even if it's over the limit, go ahead and back the whole officer out, and then go back and kind of skim to see if any of your employees are over that limit. So if, say, some employee made $2,000 on a weekly basis, you're only going to use the $1,923 for them. So you would change that and put that number right here. Then you're going to go put in your officer's salary on the next line, again, using these limits. So if they are over, you'll just put this number in. And then if you have a health insurance policy plan for your employees and you're having money withheld out of their check, you need to go in and put whatever the total amount that was withheld out of all employees' checks in this debit column right here. Because when you go and pay, say, Kaiser, you go in and you're going to pay them for the month, you're going to record that back to, on the other sheet, you're going to pay it and record it all there. So now you're deducting the piece that was withheld out of their checks. So that would go there.
So Brooke, the amount that'll go into the forgiveness calculation isn't the total bill in your case. It's not the total bill that would go to Kaiser. It would be what the employer portion was.
Correct.
For Kaiser. So you would take that entire Kaiser bill, and what we're doing here is backing out the amount the employees paid for that, because all we're allowed to take into account for forgiveness is the employer's portion of that health insurance bill.
Correct. So when you get that Kaiser bill, you're going to put it to PPP payroll costs. If say it's $1,000, you'll put it to PPP payroll costs, and then by doing this journal entry, that's going to go take the
Take it out.
$100 or whatever it is that was deducted out of employees' checks.
Yep.
To get the net amount. The next line is where you're going to go in and put in your SUTA or your state unemployment. That's going to be down low, depending on what software you use, but most of the time it's down in the employer's costs section. So you're going to grab that total state unemployment number. That goes in there. And then in that same section, you'll see the retirement contributions. So if the employer is contributing to employees' retirement plans, you would grab that total number and it's going to go right here. And then what I did is I just set up a simple little formula here that adds and subtracts all that together to get what's going to go. This is the number that's going to go to your payroll, PPP payroll costs.
So Brooke, I believe the technical term for that is a plug.
Yes, that would be the plug. Absolutely. So you're going to, and this, again, we can send this out. Just send us an email to the COVID@Mueller-Pi and we can send you this. It's pretty basic. And let me know if you have any questions, but this is pulling the numbers off those payroll reports that you need.
And you're going to need those payroll reports probably for the lender anyway. So if you've got the payroll reports and you've recorded these entries each payroll period, it's going to help the lender figure out that you've done it correctly and that your forgiveness calculation is on the mark. So
correct. So when you're done with that payroll report, either drag it into that folder you have on your desktop or stick it in the little green one and you're good to go.
Yep, that's great. Okay. I'm going to jump in and go back to the presentation. So we've talked about modifying your chart of accounts. Brooke, thank you for going through all of that, as well as that journal entry to help capture all those various payroll costs, because that is the largest portion. And as it says here, please call us or send a request to that COVID mailbox. If you have questions on getting this set up in your accounting software or questions on that journal entry, we're here to help, and we're here to make sure you get the maximum forgiveness possible on your particular loan. And as Brooke said, keep those invoices, receipts, and payroll reports. Keep those in a handy location because your lender's going to need that as proof of payment. So the more prepared you can be here on the front end to capture all this information, the easier it's going to be on the forgiveness side when it comes time to make that determination. So with that, we wanted to share some practical considerations, and some of this is based on many of the questions we've had over the last couple of weeks from clients and others about the application of this forgiveness piece of the loan program. Probably the biggest question we've got is that first one I have there at the top. Should I hire everyone back? Because if I pay all these people the payroll, then the loan's going to get forgiven, and I won't have to repay the loan. And my response to that particular question every time is to do what? So when somebody says, should I hire everyone back? My typical response is to do what? Because if you're paying your employees to stay at home and not do any work, we have an unemployment system for that. And many of those employees are probably already signed up for unemployment. And so by hiring all your employees back to not do work, but just sit at home, aren't you taking over the unemployment responsibility? And in fact, you're probably disqualifying them from unemployment benefits that you've been paying for through your state unemployment taxes for years and years and years, just for this moment. So that's an area that I would counsel everybody. You know, we don't have a knee-jerk, one-size-fits-all for answer for everybody, but
it is not black and white.
None of this is black and white. It's all unique to everybody's situation. So, you know, should you hire everyone back? If you can bring them back to work, if they can work from home, if they can produce some kind of productivity for you and your business, I would certainly encourage that. The issue of hiring everybody back just to pay them to do nothing so that your loan is forgiven, I sometimes have to challenge folks to think about, this is probably the best loan you'll ever see, the best loan you'll ever get. You might have other purposes for that money to help get your business back online and back up to speed as we emerge from this particular situation. So no easy answer there, but it all depends. Something else to think about. Did you contact your lender when this virus situation came out, and maybe your landlord agreed to defer your rents over a period of time? Maybe it's time to contact that landlord and say, I'd like to make 2 more payments on my lease, because that's going to help with your forgiveness calculation, and then maybe renegotiate a deferment later on. Likewise, did you contact your lender and ask them to defer your loan payments? If that's the case, maybe now's the time to make interest-only payments now, because that interest is going to go into that forgiveness calculation. So maybe something you asked for 2 or 3 weeks or 4 weeks ago, maybe it might make some sense to make a few payments here during this 8-week period of time to help your case for forgiveness. Is this a good time to pay bonuses? Because again, bonuses will go into that payroll cost calculation and maybe help with your forgiveness. Maybe some of your employees have had to encounter some really unusual situations over the last 3 or 4 weeks with homeschooling, childcare, those kinds of items. And maybe this is something like combat pay for those individuals. The only caveat there is to go back to what Brooke said earlier about those limitations on how much payroll can be counted in the payroll forgiveness piece, because if that bonus pushes that employee over that $100,000 annualized cap, then you may not be getting a full benefit of that bonus. Certainly this would be the time during this 8-week period of time to pay in those 401k and simple IRA matching contributions. There are some situations where you can defer paying those contributions until a future point in time. Maybe now's not the time to take advantage of those deferral mechanisms, but to be paying those matching contributions currently as you have each pay period to make sure those contributions get into this 8-week period of time. During this 8-week period of time, I would urge caution and maybe have owners consider avoiding taking owner draws like we have with S corporations, distributions as we might have with partnerships. And the reason I mention that is there is in the SBA rules for this PPP loan program, there is a provision that if some of the money is paid out to owners in the form of draws, distributions, or tax-free dividends like with an S corporation, that could expose the owner to personal liability for repaying the loan. So I urge caution in that area. You may want to take the money, but that may open up some unintended consequences for you down the road. So I would urge caution there. Should I repay the loan early if I don't actually need the money? You went and got the PPP loan, you were planning to pay all your employees to sit at home, but maybe now you're thinking, yes, they are getting unemployment, so maybe I don't need to pay them all this money. And so you may have a lot of money left over, and sure, you could repay it in 2 years at 1% interest. That's a great loan arrangement, but there's nothing wrong with paying the loan back early. If you have more money than you really needed, cut off that interest rate from accruing. And then last, the most important item in this whole presentation about forgiveness is don't do anything until June 30th to apply for forgiveness. So you go back to that calculator situation. Somebody got their money last Friday, April 17th. Their 8-week period is up June 12th. There might be a desire, as Brooke said, you gathered up all your receipts and invoices. You've got your numbers all together. You know exactly what you think you qualify for forgiveness, and you want to rush right into the lender and have them verify your calculations and forgive a piece of that loan. Wait, however, because if by June 30th you've hired everybody back, you've restored all their wages, you're entitled to what we believe is full forgiveness of that loan. So I don't think you're going to want to contact your lender until you get past that June 30th date to make sure you consider all your options for forgiveness on this particular loan. So by nature, this webinar is general information. We've given you what we think we know and what we don't know, and some tips to take in the meantime to maximize your element of forgiveness. But each of you have a unique situation. And so we encourage you that if you're looking for specific guidance, if you want to get that PPP loan forgiveness calculator, if you want to get the information that Brooke shared about that journal entry and some of those screenshots on setting up your chart of accounts, please use that COVID@MuellerPiCPA.com mailbox. We are watching that and being as responsive as possible with everything that comes into that mailbox. And we encourage you to continue to check our website, and I've got the website address there. We have a COVID page on our website where we are continually updating our information, uploading new tools, resources, helpful information that we believe will help you get through this particular situation. Let's see. So with that, let's take a look at the questions. Brooke, I think we've had quite a few questions here. We have a question: does it make a difference if you normally pay twice a month or if you paid your employees once a month? Again, I don't know that payroll frequency matters here. I believe it's more about which payroll gets paid during that 8-week period of time. I see somebody raise their hand. Unfortunately, I'm still too new at this to understand how to acknowledge somebody's raised hand. So if you can use the Q&A, that would be real helpful for us to check there. Let's see. Do you know if the reduction in headcount or wages is looked at in an aggregate or on an individual employee basis? And that's one of the things we don't know. We're not sure if it's a per employee calculation or if it's an aggregate calculation. I have to believe a per employee calculation would be, oh my gosh, that would be so onerous and burdensome. I mean, again, depending on how many employees you have. And remember, eligible businesses with up to 500 employees were allowed to apply for these PPP loans. So for somebody with hundreds of employees to apply that wage reduction on an individual employee basis, I just think that's really, really tough. We did hear from a lender last week, a local lender here in Northern Colorado, on a webinar, who indicated they would ignore that part of the test and that they would be going by head count only. So again, the lenders are interpreting some of these rules themselves differently. So make sure you know how your lender is interpreting these rules and what information they'll be looking for. Let's see. To clarify, if I get funded and I'm not open, so I hold off rehiring everybody, but I'm able to rehire and restore before June 30th, I can get forgiveness. And I believe that is the case. Again, we're waiting for guidance from SBA and Treasury to tell us exactly how that June 30th parachute works. But that's my understanding, that the June 30th is a fallback benefit to employers. If payroll is not 75% alone, can an employer give a hazard bonus? I think we talked about that you can have bonuses. You just got to watch that $100,000 annualized cap, because if you go over that cap, then maybe not all that bonus qualifies for the forgiveness. Can you claim rent if you're paying rent to an affiliated company? That's a very common situation with a lot of businesses that have owner-occupied real estate, where that real estate is being held in a separate entity and there's rent going back and forth. I have not seen anything in the law that prohibits a reasonable amount of rent being paid between affiliated entities. I would emphasize, though, that the rent should be reasonable, should be market rent, and most importantly, there should be a written lease agreement between those two entities, because as we talked about in our presentation, the rent only qualifies for lease agreements in effect by February 15th of 2020. So I'm very sure the lenders will be asking for copies of those lease agreements to make sure that the rent qualifies for forgiveness. So make sure that you satisfy that February 15th lease agreement test.
The next one on the calculator, where do you deduct expenses, excess pay over 100,000? You know, I didn't put that in there, and that's a very good point. I can go add that, an area to subtract everything that's over your limits. I didn't even think about that, so thank you. I'll go add that in.
Yes, and as far as the calculator is concerned, there is a line item in there for backing out that excess pay over the 100,000. So that is.
Sorry, I thought that was for the journal entry.
Oh, no, it works. It works well the same, Brooke. But in the calculator, we do have a line item in there where you would back out that excess pay. Let's see. We got a question about Bank of America. You know, that's a Bank of America thing. You'll have to deal with that with your lender. So again, not sure We have not seen that with other banks, but again, the lenders are driving the train here. We've given you some good information, we think, to help you maximize your forgiveness. But as we said, at the end of the day, the lenders are going to make the final call and final decision on this. Can I hire family members? And what about contract workers? When you say contract workers, I assume these are folks you would pay a 1099 or issue a 1099 to for their pay. That will not count towards payroll. We're only talking about W-2 payroll that qualifies for forgiveness. And can you hire family members? I haven't not seen a prohibition about hiring family members. However, again, I will caution about the $100,000 annualized limit as far as what you can pay during this 8-week period of time is very limited. I would also say that the family members should be working, should be producing something for the business. I don't think this is the time to hire your 4-year-old as a family member in the business, because that probably violates local child labor laws. And remember, at the end of the day, you're certifying to both your lender and the federal government for a federal loan that all these items were reasonable and legitimate. So just remember, you're making certain assertions on a federal loan. So you just want to be careful about how far you go on some of these items. I think we answered what if my rent was due on 4/1 and I paid it on 4/30, my loan went into effect 4/20. That is great, because that rent was paid after the April 20th loan origination date. So again, it's when you pay your May and June rent, if those rent payments fall within that 8-week period of time, or any back rent for April, that should work just fine. Now
The next question's payroll. Just to be clear, we're not allowed to include FUTA, which is federal unemployment tax. That is correct. You do not get to include federal unemployment. It's just the state unemployment that gets added in.
And Brooke, I just wanted to go back to that rent question again. If there's more than 2 months worth of rent paid in that 8-week period of time, expect there to be a challenge from your lender as to why, I don't think you can prepay 6 months worth of rent during this 8-week period of time. Back rent, having maybe 3 or 4 months of rent within an 8-week period is probably something that's going to be questioned. Let's see, I have an employee staying home 2 days a week, take care of kids. That's a question regarding the sick leave and the expanded FMLA. I'm not prepared to get into that particular issue. We were really focusing on forgiveness today. If those wages, though, that you're paying do qualify under those provisions, again, like I said, those wages cannot count towards forgiveness towards the PPP loan. If when I applied for loan, there were part-time employees, since it was for a full year, and now only have full-time employees, is this a problem? I don't believe so, because the head count, again, will be determined on some sort of full-time equivalent basis. So I would have to actually see some numbers on that to see how that really plays out. You can probably take the next question, Brooke. Do you know anything about how ADP handles this?
Well, it sounds like they're asking if what they pay ADP, does ADP charge count in all of these calculations? As far as, I guess the way I'm understanding it is that what you pay ADP to process your payroll, and I'm thinking no on that, because it's only the gross wages, SUTA, and benefits. So I'm thinking that's no.
And that's a good point, that for people that have a retirement plan, you might be paying the annual administration fees just about this time for them to do all your annual census and annual testing information, particularly for like a 401k plan, or to prepare the annual 5,500 for your retirement plan. Those are retirement plan administration fees. Those will not count towards the payroll cost calculation. Let's see, somebody said, should I hire everyone back? This is under the practical considerations. I have not received PPP funds yet. Do I need to wait to hire back current new employees for that 8-week period benefits? Again, the amounts that you pay in payroll during that 8-week period of time are the only payroll costs that go into the calculation of forgiveness. So any payroll you pay out now before you get the PPP loan is not going to count within that 8-week period of time. It's only once the window opens and the window closes at the end of 8 weeks. That are the costs during that window period are the ones that are counted towards the calculation.
The next one asks, should we open a separate bank account for the loan funds? And I think we actually meant to talk about this, so thank you for bringing that one up. I did see somewhere that some banks may be suggesting that, or maybe the application. I don't know that we feel that that's a necessity. This is only for an 8-week period. And I feel like by the time you go and open the bank account, order checks, when you deposit that check in and you put it to the loan and then you have all the expenses separate, I think that's accounting for everything. I would definitely talk to your lender. That may be something they require, but I don't know that accounting wise, if you're catching everything, if you have to open that other account. Your thoughts, Paul?
Yeah, I talked to a lender a week ago because we did get that question from a couple of folks. And in fact, I've seen some blog posts about opening up a separate bank account. No one's been able to explain why you need to have a separate bank account for it. And in fact, one of the lenders I talked to last week said they wouldn't do it. They wouldn't go through the time and hassle to set up a separate bank account that was only going to stick around for 8 weeks. Or if they did, they were going to charge some significant fees for opening.
By the time you order checks to pay out of those, I mean, you're going to be 2 to 3 weeks into the process anyways. So again, I would check with your lender, but as long as you're catching everything, I think that's the main goal here.
Yeah, I think mainly tracking the loan balance on your books and tracking your payments for that 8-week period of time. Those are the 2 items to keep that really need to be kept track of. How should self-employed people pay themselves during the 8-week period? I'll go back to the special rule that we mentioned early in the presentation that the SBA issued last Tuesday that said for self-employed people, 8/52, it's a fraction, 8/52 of their Schedule C net profit from their 2019 tax return will be the payroll cost amount that gets forgiven. So it's not based on what the self-employed person earns during this 8 weeks. It's 8/52 of what their profit was in 2019. So how self-employed people pay themselves isn't going to impact the forgiveness at all. Can we wait it out and then accelerate wages and payments once some of the forgiveness details get ironed out? To maximize forgiveness, that's a question I would address with the lender. You'll have to share that information with the lender. They may be squeamish about seeing 7 weeks of no payroll and then a humongous payroll in the 8th week. Plus, you probably get into some wage and hour issues that are Department of Labor type issues for that. So I'm not sure that you're going to be able to manipulate or game the system for that. Our 1099 contract. Oh yeah, go ahead, Brooke. You can take this one.
1099 contractors included in payroll costs. No, they are not. That's only the W-2 employees.
Correct. Yeah. Utilities. Can you use expenses that you incurred starting February 15th and have already paid? No. The 8-week period of time is based on actual payments. So if you've already paid those utilities, you can't come back in and pay them again or run them through this 8-week period of time. We as owners have been paying our employees but skipping pay for ourselves. Can we give ourselves back pay and have it count towards the forgiveness at the end of the 8 weeks? Again, subject to those limitations that Brooke had on that sample journal entry based on your payroll frequency, there'll be a cap on how much payroll can be considered during each payroll period. So depending on the amount of back pay, there is going to be a cap on how much of that can be covered. We have a question about mortgage interest, if that includes a truck payment. You know, my reading of mortgages is if the loan is secured by the asset, if you did make payments on that loan, the lender could seize those assets. That is a mortgage, and so that should apply. But again, that would be a question to run past your lender to make sure that they'll be on the same page as well. So we have a question about, is it for employees on reduced hours, is it better to boost them to full-time, allow others to get unemployment with the thought that I can rehire by June 30th? Well, the June 30th would be the parachute that would resolve all issues, or at least it appears to be that way. Whether you pay some people full or reduce and let them rely on unemployment, that's really going to be kind of an individual consideration. That's a tough question to answer. We have a question about prepaying rent. Again, it's the rent that's paid during this 8-week period of time that would qualify. I don't think the rent, if you're paying your June rent on May 20th, I don't know that the lender's going to worry about the fact that was a prepayment. It was a payment during that 8-week period of time. Again, what I would say is if you're trying to cram more than 2 months of rent payments into that 8-week period of time, you probably ought to have a discussion with your lender about how they'll view that particular transaction. But I believe trying to pay more than 2 months worth of rent in that 8-week period of time is probably subject to some level of scrutiny. So I would be careful there, but again, make sure your lender, what their view is on that. Let's see, somebody's asking about the first round of loans. We already applied with Compass. We have concerns that maybe we didn't receive the loan due to the size of the bank. Can we go with a different bank on the second round? You certainly can. We're hoping to get some rules from the SBA because we certainly heard from a lot of clients that were dealing with Chase Bank, and I'm not criticizing Chase Bank at all. We did have some clients that did not get their loans funded in time before the money ran out, and so there was a question about how do I yank that application away and file with another bank, because the PPP rules do prohibit multiple applications with multiple banks. We just have not seen any guidance from the SBA in terms of how you're going to be able to take down one application and resubmit someplace else. So if you are looking at a second bank that you would like to perhaps deal with once this second round becomes real, that would certainly be a conversation with them to see how they can perhaps participate in the system to make sure you're not already filed with another bank someplace else. A lot of these loans are being, there is an electronic platform the SBA is using for processing these loans. So it might be that your next lender might be able to look into the system to see if there is another active application in place and either take it down or tell you that it's in process. Since we have so many seasonal workers, is there a requirement that we have to reinstate the same exact employee? I doubt that. I think they're looking at headcount. So no, I don't think you have to have specific identity as to who you hire back. Since it's cash versus accrual basis, could you use it to reimburse yourself for a rent check that was deposited after you received funding? I'm not sure I exactly understand that question. I think maybe you're saying you paid it and it was deposited by the landlord. Yeah, I'm not really sure. I hesitate to answer that question because I'm not really sure what it's asking. But again, if you already paid your, what is this, today's April 20th. Let's say you've already paid your May rent early and now you get the loan tomorrow. Well, you can't pull that rent back into the forgiveness period because you paid it outside of the forgiveness period. Brooke, you look like you have a question here.
Yes, the next one says, Brooke mentioned interest on equipment financed being similar to a mortgage. How about leased vehicles used in the business? Paul, I'm going to go back and forth on this one because if it's leased, does that count as rent then? And is that a...
Yeah, so we would have to know more about which type of lease it is.
Terms.
Yeah, under the tax rules, there's operating leases and financing leases, and they all come with different sets of rules. So if it was an operating lease, like you're just paying month-to-month rent, and that's the way it's treated for income tax purposes, I believe the rent would fall into the rent forgiveness calculation. If on the other hand, it's a financing lease, typically, the type of lease where at the end of the lease term, it's $1 purchase option. the tax rules refer to that as a financing lease. It's just like a loan. In that case, you'd have to compute the interest amount on those payments, and that interest portion would qualify for the forgiveness. Okay, somebody did open up a checking, their lender required them to have a checking account. Oh, that's great. They may want that deposit relationship too to carry on after the 8-week period of time. So this was a way for the bank perhaps to gain some new business by having you open up a checking account.
The next it says, can we just run payroll reports with custom dates to compile the necessary information instead of creating the special PPP tracking accounts? I guess, I mean, these are just suggestions as a way to track it. They're your books, it's your accounting. I say do whatever works best for you and what your lender requires as well.
Yeah,
I would follow up with them on that.
Yeah, because I think we've had some feedback from lenders. They might be looking for pay period by pay period detail, and perhaps a summary report may not be something the lender is what the lender will take. They may want a more detailed analysis of your payroll by pay period. But again, like you said, Brooke, that's something to talk with your particular lender as far as the documentation they're going to require when we get to this end of this 8-week period of time. Oh, this person that said they had to open up a checking account, they haven't received their loan funds yet, but the bank required us to open a checking account. My comment is related to somebody else's question. I'm not sure.
That might be one we might need offline.
Yeah, we'll take a look at that one offline. Somebody asked about self-employed. What if you've not filed your 2019 tax return? Again, that's going to be a lender question. What we've seen, and then the SBA rules for the self-employed and independent contractor loan applications, it was specific in their guidance that there had to be a 2019 Schedule C. I've heard that lenders will accept a draft of the Schedule C, but they've got to have that document in their records to both lend the money to know how much they can loan, and then also determine the forgiveness on the back end based on that 850 seconds calculation. So if you don't have your return done, perhaps a draft of that form will suffice. But again, that's based on what your lender will demand. Lisa has, if you pay overhead to another entity, can that be considered rent? Again, I'll go back to, there has to be a lease agreement in effect between the two parties as of prior to February 15th, 2020. So you would have to follow the terms of that lease agreement to qualify as rent. And I assume you'll have to give a copy of that lease agreement to the lender as well as part of their verification process. Brooke, here's a question on payroll again.
Yeah, and it looks like it says, can I run those reports you're talking about? But it's by pay period, depends on what payroll solution you're using. I would just make sure, even if you have to run it by pay period, that the check date is within that 8-week frame. So if when you go to run the report, if you have to put in the actual pay period, again, just make sure that the check date of that payroll is within your 8-week period.
Great, yeah. Let's see, I've received word that my loan was funded, but I've not yet received the funds. I've not received any of the EIDL, the emergency grant, although theoretically I would have qualified for the full 10. Do you know of anyone that has received the EIDL funds yet? Oh yeah, we've had, those funds started rolling out last week. So we were hearing from a lot of clients that they were receiving the 10,000 or a reduced amount, because they changed the rules on that, and they made it based on $1,000 per employee up to a maximum of 10. But yes, those funds were flooding out all last week. Unfortunately, I don't know of a way to, if you haven't received yours, I don't know of any way to, if there's any sort of verification process other than calling the SBA, which make sure you pack a lunch, because you're liable to be on hold for a long time. If I get funded on May 8th, will the June 30th deadline still apply, or will the deadline be 8 weeks from May 8th? Well, there'll be the 8-week window. Yeah, I'm not sure how the June 30th works in that case. I think as a practical matter, though, if there is a second round of PPP loan funding, it's not going to run as long as May 8th. It'll probably be like the last one, that ran out of money pretty quickly. So we'll just have to see later on in those situations how the SBA issues rules on the interplay between the 8-week period and the June 30th period. Okay, I don't see any other questions in the box, and we, let's see, did we have, I think we just had a question come in. Our bank is, instead of giving us the loan and a full amount, requiring we submit a form for reimbursement of forgiveness.
I've heard of that too.
Or other banks just giving the full amount of the loan amount into bank accounts. We've heard of that. I'm not exactly sure how they're working it, like maybe in advance, that as you have a payroll item, they'll advance you the loan. That's not really sure how that works. I think most banks have been advancing the money. So that may just be a particular bank is handling it their own particular way. So again, at this point, the lenders are driving the train. So they're in control of this situation, both in terms of advancing the money and determining how much is forgiven. So that's a discussion with your particular lender. Okay, we have gone just a little bit over an hour, and I hope this information was helpful to everyone and that we were able to answer your questions. Again, I'm sure there's going to be a lot of follow-up. There's going to be information that's maybe unique to you that we weren't able to cover in this particular program, but I hope this information was helpful in helping you determine what your forgiveness is likely to be and guide your actions over the next 8 weeks to maximize your forgiveness once you receive your loan money. Again, I'll encourage you to contact us at COVID@MuellerPiCPA.com for ways that we can help you and furnish you some of these tools, and also steer you to our website where we're posting continual updates and resources on these COVID-related issues at the website. So with that, we hope everybody stay safe and be strong. Be sure to lean on us on how we can help you get through this particular COVID crisis, because we are here to help. So everybody have a great Monday. Have a great week. Take care.
Thanks, everybody.